Hey guys, what's up? This is Francisco with Valareso Capital, and today I'm gonna go with you with the weekly watch list for the week of January 24th, and we're also gonna do a small review on the trades from the last weekly watch list, and of course we're gonna take a quick look at the major indexes. We're gonna take a look at the Nasdaq Composite, at the Nasdaq futures, at the S&P 500 futures, IWM. We're also going to check the DIA, and we're also going to take a quick trip to check the ARK ETF and see if there are any levels that we can consider as support right now in this downtrend. So let's first start with a quick look at the IXIC right here. We can basically see here that last week was a complete waterfall to the downside, and but we were ready for that, right? If you check the last weekly watch list, we were ready for it. We knew that we have a sell signal. We knew that we have a squeeze that is pointing to the downside, and we already knew that the price, as soon as it reached the -3 ATR level, it bounced into a decline in 21 EMA, and that is textbook price action for a downtrend. So we were aware of this, right? This downtrend is coming in no surprise. Of course, is coming pretty rapidly, and we are already slicing through very important levels of support. So as of right now, we can see that we are below a decline in 50 day simple daily moving average. We are below a decline in 21 exponential moving average, and we are below a decline in 8 exponential moving average. So of course, right now we can see that we are clearly extended to the downside, right? We are usually looking for -2 ATR to act as support, as the same way that it worked here, the same way that it worked here, that it worked here, that it worked here. And right now we are right now we're going way below -3 ATR. So we're clearly extended to the downside. But of course, given this rapid move to the downside, given that we close right at the lows of the day, a margin call Monday should not be any surprise for us, right? That could happen. Maybe we already have a margin call Friday. But as always, be prepared for anything. I don't think that there is any reason that we want to buy this dip. If anything, this is a clear downtrend. And what we want to do in downtrends is we basically want to short the effing rip, right? That's what we want to do. So use the 8 and the 21 as levels that you want to get in some shorts and look for more downside, right? I don't see any reason to think that the market is going to stop selling until the Fed changes its tone. And we can see that we're starting to test these levels right here, right? And that's something really important. We see that we already blast through those levels. Then we have this level right here. We have this level right here. So there's no clear support. And if anything, I would just consider any trades to the downside as opportunities, right? Because if you want to buy something, it will be basically fighting against the water, right? So always be aware of that. Now let's go through a quick look at the Nasdaq. These are the QQQ futures, right? The Nasdaq 100, and we can see the same thing, right? We're below the these key moving averages, and we see, right, we have an active sell signal and a squeeze that is firing lower. So of course, be aware of these October lows. Perhaps they act as support. Perhaps we can find some buyers around these levels and we can bounce. But eventually, if we don't have any change in tone from the Fed, if we don't have any price action that is above this 21 exponential moving average, I'm expecting for more downside here. So that is for the Nasdaq composite, a pretty similar chart as the IXIC. Now let's start looking at the S&P futures, and we can see the same thing, right? We we fell here at the 50 daily moving average, right? Price found resistance, and the same thing, right? We went down. We tried to move above the 50 DMA and above the 21 exponential moving average, right? And we failed. And we have the same thing here, right? We have a sell signal, we have a squeeze that is pointing lower, and we don't have any place of support until these levels down here, in my opinion. So be aware of that. I'm looking for more downside in the S&P 500 as well. And now let's go and check the RTY, and the action is pretty similar, right? This is pretty textbook action, right? We have the move below the 50, We have the fail at the 21 exponential moving average. We have another move down, and then we have the fail at the 50 DMA. And then after that failure of the 50 DMA, boom, we have the move lower, right? We have an active sell signal, we have a squeeze that is pointing lower, and I don't see any reason to think that this sell-off is gonna stop anytime soon. And if we move down here, right, we can see that the RTY, right, is the IWM futures, has been consolidating for almost 1 year, right? And right now, what is happening, right? We have this failed attempt of a rally, and after a failed attempt of a rally, usually we get a very aggressive move to the downside, and that is exactly what is happening right now. So we're closing below these lows, and this could be the start of a downtrend, right? Now, where is this downtrend going to stop? My first guess would be that we're going to see price coming all the way down here. Of course, it could happen, it could not happen, but right, we have the accumulation phase, we have the advanced phase, now we have the distribution phase, and now we're about to get the declining phase. That's a normal market. That's the normal environment of a market. We have to be ready for this. This doesn't mean that we cannot trade this, but we have to be aware that it's different, right? Here we're buying the dips, here we have to short the rallies, right? So always be aware of that. If you're trying to buy the dip, you're basically swimming against the stream, and just take that into consideration. Now, lastly, let's take a look at ARK, and we can see the same thing, right? We can see that ARK, if we just zoom out here a little bit, we can see that ARK, right? We have the accumulation phase right here, right? We have the accumulation phase, then we have the advanced phase, then we have the distribution phase, and now we're having the downtrend here. So where is this going to stop? My first guess is that we're going to test this breakout level from 2020, right? We can see here that we have this breakout, we have this huge move to the upside, and now we're just giving everything of that back. So it wouldn't be a surprise for me that we're going to test somewhere on the 60 level in the ARK ETF. As always, if we zoom in a little bit here, right, we can see kind of the same price action, right? We have an active sell signal, we have bearish momentum, and we have a squeeze that is pointing lower. We're below all the key moving averages, and there's no sign of a bottom as of now. So be aware of that as well. And now moving into some of the names that I mentioned in the last week, right? We mentioned the YM, right? We mentioned the YM right here into the, let me check the days. We mentioned the YM right here, right into these 2 days right here. We mentioned that we have an active sell signal. We mentioned that we have the transition to neutral momentum from bullish momentum, and we mentioned that we had the squeeze that was pointing lower. We also mentioned about the divergence that we were having, right? We were having a higher price, but we were having a lower indicator in both of my momentum indicators. So that's really important to understand, right? Basically, price was moving higher on less energy, and that's usually an indication for a high probability failure of support, and that's exactly what we got here. And of course, if you wanna trade the YM right here, right, you can trade it via YM, or you can trade it via DIA. But just consider that right now we're extended, right? Right now we're right here at -3 ATR, and every time we're down here at -3 ATR, we usually get some bounces, right? We could get some really strong bounces. So if you want to get into a short here, I will just wait. We might continue to move lower, right? We don't have any signs that this is going to turn. But most of the times, if we get a short covering rally, I'll be looking to short somewhere around this key moving average, right? The 8 exponential moving average and the 21 exponential moving average. So, right, this was a clear winner from the weekly watch list. And now let's go into the next name, right, that we had. We mentioned AMD, and the same thing, right? We mentioned AMD into this day right here, and we had the same thesis, right? We have the indicator that was going into bearish momentum from neutral momentum, and we had the squeeze that was pointing lower. What's more important here in AMD, and this is price action at its purest form, right? We have here in AMD, we have price going high using this 50-day DMA as support, right? Support here. But what happened this day right here? We broke down below support. And the moment we broke down below support, we have this huge move to the downside. And then what happened? We fell at a declining 21 exponential moving average. And that is a textbook entry for a short position. And that's exactly what we suggested in the last weekly watch list. And that's exactly what happened here, right? So right now, if you want to short AMD, you're a little bit late. This is extended to the downside. We are almost at minus 3 ATR. So I will just wait for earnings to be done, right? Anything can happen after earnings. And I'll be looking to get new shorts somewhere around these key moving averages. So another winner for the weekly watches of last week, right? This was looking pretty nice. Now the last one, right? Let's check out NVIDIA. And right on NVDA, right, we have basically the same action, right? We have this accumulation right here, and then we have this strong move to the outside, to the upside, and we were using right this 50 DMA as support both on these occasions. But of course, the moment that we broke through below that, we fell at that 21 exponential moving average. We have the bearish cross between the 8 and the 21 exponential moving average. And right now we're extended to the downside, right? We have an active sell signal and we have a squeeze that is pointing lower. So that's actually pretty interesting to consider. And something that I want to show you here as well is something really cool with with the RAV indicator right here, right? Notice how here we have price going higher, right? We have a higher low, a higher high, but we actually have a lower high in the momentum indicators. And that usually signals that there's a high probability that any move into support, right? Remember that the first line of support is the 21 exponential moving average in a high momentum stock is going to fail. And that's exactly what happened. And then we continue to have momentum going to the downside. And that should suggest that the next line of support, which is the 50, is going to be broken out eventually. And that's exactly what happened. And now we're having this strong move to the downside. So always be aware of those moves, always be aware of those signs. If you have any momentum indicator, something as an RSI, that's usually helpful as well. But of course, the indicators that I'm using, if you want to check them, if you want to take them a look, this is the RAV indicator and this is the squeeze, right? Both of those indicators were created by the community at simplertrading.com. And I'm using them. I have used them for quite a few years right now, and they are a game changer for my analysis and for my edge. So of course, I don't have for this week, guys. I don't have any new names that I want to mention. If anything, I would just wait a little bit. Right, we have a lot of earnings coming out next week. I would just give this some time. We have the Fed meeting on the 24th. We have the Fed meeting on the 26th, right? Right, we have the Fed meeting on the 26th. I would just wait for that. Usually, we're probably going to move higher into that meeting, and perhaps if they don't say anything that is going to mention something about the rates going about taking more time to to raise rates, I don't think that the market is gonna find any new excuse to rally and to have a sustained uptrend until the Fed stop having that hawkish arguments and comments. So be aware of that. Just wait. There is no need to open any trades tomorrow morning or on Tuesday. I will just wait for the Fed. Let's see what the Fed has to say. Perhaps we get a really strong short covering rally into the meeting, and perhaps we're gonna get some really good entries for new bearish positions, right? I continue to think that right now the market is in a downtrend, and I think that the best opportunities that we're gonna get are gonna be bearish opportunities. So of course, if I see anything midweek, guys, I will post a new video. But of course, thank you for watching, and I wish you a happy rest of your Sunday. And of course, we will see each other on Twitter and talk about more trades. So thank you so much, guys, for watching, and have a good one.